Welcome back, everyone, to the deep dive. Today we're diving headfirst into a pretty huge economic story. The recent tariffs implemented by the US and the global reaction it's caused. I mean, things are moving so fast. It feels like every hour there's a new headline, a new market swing. So, what we really want to do in this deep dive is try to make sense of it all. What are the immediate consequences? What kind of ripple effects are we seeing based on what we know right now?
Yeah, it's been remarkable to see how quickly and broadly these tariffs have triggered reactions from business leaders, speaking their minds pretty directly to these major international markets reacting the way they have. It just shows how interconnected the global economy really is.
Absolutely. And speaking of business leaders saying what's on their mind, we can't ignore Elon Musk's comments about Peter Navarro, the White House trade advisor, and his support for these tariffs.
Oh, yeah. Musk didn't hold back at all. He called Navarro, well, stupid as a cork to start. And I've even heard some say he went as far as to say dumber than a sack of bricks. And of course, he called him a real idiot. I mean, strong words. But beyond the insults, Musk also highlighted that whole strange thing with Navarro allegedly creating a fictional economist named Ron Vara, which is suspiciously close to his own name, and then citing this made-up economist in his work.
That's a pretty pointed and personal attack, and it seems like a big part of their disagreement boils down to where Tesla gets its parts for its vehicles. Navarro suggested in an interview on CNBC that Tesla is mostly an assembler, a collector of parts from overseas taking advantage of cheap imports.
Right, which is the complete opposite of what Musk claims. Musk insists that Tesla is the most vertically integrated car company in the U.S. and that they have the highest share of American parts in their vehicles. This back and forth really gets at the core of what these tariffs are supposed to do right, which is to help domestic industries and reduce our reliance on foreign supply chains. But it also shows how complicated it is to define what made in America actually means in today's globalized economy.
It definitely does. Okay, so let's zoom out a bit and look at the broader situation. On April 2nd, the U.S. announced these reciprocal tariffs on a whole bunch of countries. The basic rate was set at 10%, but as we've seen, some countries are getting hit with a lot more than that.
Yeah, the rates are all over the place. China is facing a 34% tariff, the European Union is at 20%, and Vietnam is getting slapped with a whopping 46%. Interestingly, though, Russia wasn't included in this first round of tariffs. And of course, both the EU and China were quick to say that they're planning on retaliating with their own tariffs.
And they weren't kidding around either. These base 10% tariffs went into effect on April 5th, and the higher rates are set to kick in on April 9th. So things are moving really fast, and the markets have definitely taken notice.
Oh, for sure. That initial downturn started almost immediately on April 3rd. We saw big drops in major indices like the S&P 500, Japan's Nikkei 225, Hong Kong's Hang Seng, the CSI 300 in China, and even in Europe, with Germany's DAX, the UK's FTSE 100, and France's CAC 40 all taking a hit. It was a pretty broad sell-off, a clear sign that investors were getting nervous. You see a widespread market drop like that, that often means people are worried about future economic growth and how these tariffs might hurt corporate earnings.
Right. And then things escalated quickly with China's response. On April 4th, just a day after the U.S. announcement, China announced their own 34% tariffs on imports from the U.S.
Exactly. And all of that initial shock really hit hard on Monday, April 7th. Asian markets plunged, down anywhere from 7 to 13%. European markets weren't far behind, with drops of 3 to 4%. And then when the U.S. markets opened, we saw the same downward trend, with the S&P 500, NASDAQ, and Dow Jones all falling by 4 to 5%. Overall, the S&P 500 ended up dropping over 13% in just 3 trading days. Its worst 3-day performance since that crazy volatility we saw in March 2020 when the pandemic first hit. Yeah. I mean, when you see a sharp drop in a broad market index like the S&P 500, it's a pretty clear sign that investors are losing confidence across a whole range of major U.S. companies.
It really goes to show how much potential these trade actions have to destabilize the markets. But wasn't there a brief moment there where it seemed like things might calm down? There were those rumors floating around about a possible delay in the tariffs.
Yeah, there were. And those rumors did actually spark a little bit of a market recovery. But then the White House came out and called those reports fake news. And that sent the markets right back down again. And then to add even more uncertainty, President Trump hinted at the possibility of even higher tariffs on China, potentially more than 100%. That kind of talk throws a huge wrench into things because businesses and investors just don't know what to expect when it comes to future costs and trade relations.
Talk about a roller coaster ride. But it seems like later that same Monday, we did see some signs of stabilization.
Yeah, by the end of trading on Monday, the S&P 500 had managed to claw back some of its losses, and that slight rebound seemed to carry over into Tuesday.
So Tuesday, April 8th, brought a little bit of relief.
It did. Japanese indices, for example, jumped up around 6%, and Chinese and Hong Kong indices saw more modest gains, about 0.5% or so. U.S. futures were also pointing upwards. It's interesting, actually, that big surge in Japanese stocks was apparently influenced by instructions to start bilateral trade talks with the U.S. So it seems like the prospect of direct negotiations is being seen as a positive sign by investors, a potential way to ease those trade tensions.
Makes sense. The idea that things might de-escalate could definitely reassure investors. And it wasn't just Japan looking for a conversation, was it?
No, the U.S. Treasury Secretary said that almost 70 countries had reached out wanting to negotiate with the U.S. He even suggested that tariffs could be reduced after successful talks. This shows just how much these tariffs are affecting global trade relationships and how eager everyone is to find some kind of resolution. And on top of that, it looks like China was actively trying to stabilize its own markets.
What did they do?
China's sovereign wealth fund, the Central Huijin Investment, stepped in and started buying shares listed on Chinese exchanges through exchange-traded funds. They said publicly that they plan to keep increasing these holdings to make sure their capital markets stay stable and running smoothly. When a government intervenes directly like that, it can often calm investors down because it signals that they're committed to keeping the market steady.
Fascinating to see all these different strategies countries are using to deal with these tariffs. Now, what about Russia? You mentioned they weren't initially targeted by the U.S. tariffs, but their market still reacted.
Right, the Russian stock market did go down, but the initial drop wasn't really because of the U.S. tariffs. The main factor seemed to be that expectations about the situation in Ukraine weren't met. This led to a record 14 straight days of decline for the Moscow Exchange Index. However, on Tuesday, April 8th, the Russian market also started to recover a bit, with gold mining companies doing particularly well. Analysts at PSB said they thought the Russian market was oversold, meaning it had probably dropped more than it should have based on the fundamentals, which could explain that bounce back.
So a mix of things going on in the Russian market. Now let's shift gears and talk about commodities and currencies. We've seen some pretty notable movements there as well.
Definitely. The worry about how these tariffs might impact the overall global economy caused a big drop in the price of Brent crude oil. It fell below $63 a barrel, at one point its lowest point in 4 years. It did recover a little bit after that, but Goldman Sachs actually revised their forecast for Brent crude prices downwards for 2026 because they're concerned about recession risks and a possible increase in oil supply from OPEC plus raise. When they lower their future price expectations like that, it really highlights those long-term anxieties about global economic growth.
That's a pretty big revision and a sign that those concerns aren't going away. And it wasn't just Brent crude that was affected, was it?
Nope. Russia's Urals crude oil also went down, falling below $53 per barrel, which is actually lower than Russia's own budget forecast for 2025. Copper prices were initially pushed down, but then they bounced back up, apparently, because of Chinese buyers coming in. Gold, on the other hand, saw its price go up because investors were looking for safe haven assets in all this uncertainty caused by the trade tensions. Gold is often seen as a safer bet when the economy is looking shaky.
So, mixed signals in the commodities market. Some sectors are feeling the pain more than others, while safe haven assets like gold are in higher demand. What about currencies, though? The U.S. dollar seems to be weakening.
Yeah, the U.S. dollar index, which measures how the dollar is doing against a basket of other major currencies, took a big hit after the tariffs were announced. It was actually reported as the worst performance for the Bloomberg Dollar Spot Index since it started in 2005. And that selling pressure on the dollar continued into April 8th. On the flip side, the exchange rate between the U.S. dollar and the Russian ruble, or USD/RUB, initially went up because of worries about the impact on oil prices, a key export for Russia. But then it dropped again on April 8th as the overall market sentiment started to improve.
Clearly, these tariffs are having a big and immediate impact across all sorts of asset classes, including currencies. And it seems like even the cryptocurrency market wasn't spared from this global economic anxiety.
That's right. After being relatively stable for a while, the cryptocurrency market took a nosedive on the evening of April 6th. Bitcoin's price fell below $75,000, and Ethereum dropped below $1,500, its lowest point since early 2023. Solana and most other major cryptocurrencies also saw big losses. This sell-off in the crypto market happened right when those traditional global markets were getting really jittery, with over $1 billion in long positions in cryptocurrency derivatives being liquidated. Liquidation in this case basically means that traders who had bet on prices going up were forced to sell their positions, which drove prices down even further.
So even assets that are often seen as somewhat separate from traditional financial markets are feeling the effects of this broader economic uncertainty. Now, zooming out a bit, what are some of the initial assessments we're hearing from experts about the potential economic impact of all this?
Well, there's definitely some concern out there. Former U.S. Treasury Secretary Lawrence Summers estimated that these tariffs could end up costing the U.S. economy a massive $30 trillion. He even warned about the possibility of market turbulence, similar to the crises we saw in 1987 and 2008. And analysts at JP Morgan have significantly raised their estimated probability of both a U.S. and a global recession, up from 40% to 60%, specifically because of these new tariffs. Those are pretty big revisions, and they suggest that economic experts are getting increasingly worried.
Those are some serious estimates, and they paint a pretty bleak picture of the potential economic consequences. It seems like there's a growing sense that these tariffs pose a significant economic risk.
Yeah. Goldman Sachs also upped their forecast for a U.S. recession within the next 12 months from 35% to 45%. And it's not just the chances of recession that are being reevaluated. Some major Wall Street firms have started lowering their target prices for the S&P 500 index for the end of 2025. Bank of America, Evercore ISI, Oppenheimer, and JP Morgan have all made downward revisions, with JP Morgan being particularly pessimistic compared to their previous estimates. When they lower their market targets like that, it means they're expecting lower corporate profits in the future, likely because of the tariffs.
So, all in all, the initial economic projections following these tariffs are not looking too good for the economy or the stock market. Now, one particularly interesting thing that's been reported is how these tariffs are affecting President Trump's own finances.
Yeah, Forbes reported that President Trump's net worth has dropped by about $500 million since he announced the tariffs on April 2nd. They even broke down where they think those losses are coming from. The biggest estimated loss, around $170 million, was from the decline in the value of Trump Media and Technology Group, which is the company behind Truth Social. His commercial real estate holdings reportedly lost about $90 million, his golf business about $70 million, and his hotel and resort business around $65 million. And even his real estate holdings, including properties like Mar-a-Lago and Trump Tower, are estimated to have lost value, contributing another $20 million or more to his losses. The rest of that $500 million decrease could be from losses in crypto assets and bonds that he holds.
Wow, that's a pretty detailed breakdown of how this might be hitting his own wallet. How has the White House responded to this?
Well, a White House representative said that President Trump's main focus is on his policies, not his personal business, and that his grown children are the ones managing his assets. They emphasized that the president is committed to making the country economically prosperous through his policies. It's also worth pointing out that during the same time period, other billionaires like Elon Musk, Jeff Bezos, and Mark Zuckerberg have also seen their net worth go down, which suggests that this broader market downturn is affecting a lot of wealthy individuals.
That puts things in perspective, showing that these market swings are impacting a lot of people who have a lot of money invested. And in another escalation of this trade war, it seems the U.S. has actually raised tariffs on goods from China even more.
Yeah, the U.S. has now slapped a total of 104% in tariffs on goods coming from China. That's a combination of a new 50% tariff on top of the existing 20% tariff related to fentanyl and the previously announced 34% tariff. These extra tariffs reportedly went into effect at noon Eastern time on April 8th because China didn't back down from its earlier retaliatory measures. This move shows that the U.S. is taking a tougher stance on trade with China.
So the back and forth with these retaliatory trade measures just keeps getting more intense, and China's 34% retaliatory tariff on U.S. goods is still on track to take effect, right?
Yep, it's set to kick in on April 10th. And to make matters worse, President Trump has even talked about raising tariffs on Chinese goods by another 50%, which would be a huge escalation of this trade dispute. Not surprisingly, the Chinese Ministry of Commerce has come out swinging, saying that they'll fight to the end if the U.S. goes ahead with those extra tariffs. This kind of strong talk from both sides suggests that this could be a long and messy trade war.
It definitely feels like we're watching a trade conflict unfold in real time with some potentially serious consequences for the global economy. So, to recap what we've covered so far, the U.S. has imposed these new tariffs, which caused global markets to plummet, followed by a partial recovery. We've seen a lot of volatility in commodity and currency markets, a decline in the cryptocurrency market, and various institutions have downgraded their economic outlooks. We also talked about the impact this is reportedly having on President Trump's own wealth and the latest news about even higher U.S. tariffs on China. This deep dive has been all about presenting the facts of what's happened in the immediate aftermath of these tariff announcements, based only on the information that's available as of today.
What's really amazing to me is how intertwined the global financial system is. These tariffs started with one country, but they've had a ripple effect across the entire world and across all sorts of asset classes in a really short amount of time. It just goes to show how sensitive the global economy is to changes in trade policy and how quickly and dramatically markets can react.
It really does. It's a lot to take in, and things are clearly still developing.
It really makes you wonder, given these immediate and widespread reactions, what do you think the most significant long-term consequences of this shift in U.S. trade policy will be? Something to think about.
A great question for everyone listening to ponder. Subscribe to our podcast on Spotify, Apple Podcasts, and YouTube. We are here to make things clear. New episodes every day.